Hi, this is Zak Mir from Master Investor with a look at some bulletin board hero stocks on Tuesday, the 3rd of March. I'm starting off with Bacanora Minerals, which has been something of a favorite over the recent past. The reason for that is the presence of a V-shaped bull flag above former resistance in the 55 pence zone from January and December. View now is that we should be heading higher via this bull flag. And as long as we remain above the 10-day moving average, just under 64 pence at the moment, there could still be significant upside within this rising trend channel from the end of July. Target here as high as 100 pence over the next 4 to 6 weeks. If you're cautious on the shares, maybe you wait for a break or an end of day close above the old 73 and 3/4 February high, but it does look as though enough work has been done here over recent weeks to deliver a decent push to the upside. Another stock which is breaking out or has been breaking out over the recent past is Blur. Here there was a decent buy signal from a technical perspective with this bear trap below 60 and the unfilled gap to the upside. After that, recovery of the 60 pence level and the 50-day moving average were all positive. Then we had a bull flag here as well towards 80 pence. Position now a similar V-shaped bull flag to that seen on Bacanora at the moment. Likelihood is further upside towards the top of a rising August trend channel as high as £1.30. Stop loss on the buy argument in the first instance, and end of day close back below the 10-day moving average at 91 pence. Any weakness towards that initially regarded as a buying opportunity. If you're cautious on the shares, maybe wait for a clearance of 102.96, which was the initial February peak. But as I said with Bacanora, the stock has done a lot of work in the recent past to deliver a strong breakout. Next up is Mosman Oil and Gas, which I read somewhere on a fundamental basis was not looking too healthy, but as you can see from the technicals, decent base building here. Highlight in the recent past really was this exhaustion gap, a bear trap reversal from January going into February. Good news going into March is the way that support seems to be coming in at and above the 50-day moving average at 7.54 pence. That's shown here in blue. The view now is that while there's no end of day close back below the 50-day line, we should see further significant progress here. Initial target, the 200-day moving average at 16.8 pence. And the best case scenario over the next 2 to 3 months is a top of October price channel target as high as 25 pence. Next up is stock which had a great day yesterday, top of the LSE rises, and that's Red Emperor. The point to note here really is the unfilled gap to the upside through the 200-day moving average of 2.5 pence. That comes in the wake of an unfilled gap through the 50-day moving average in the middle of February, and that is significant because any major gap through the key moving averages, such as the 50-day and 200-day, tend to lead to significant upside. The last time we saw this combination with the 50-day and the 200-day being gap through was at DP Poland, and those shares doubled really from this point, the equivalent point, when they were 12 pence after they broke the 200-day line. So looking for a return towards the 5 pence area, which is the top of last year's trend channel, and that would break the summer resistance around the 4.5 pence level as well. Stop loss on the buy argument, which one would be quite keen to keep an eye on, is basically an end of day close back below the floor of the gap at 2.2 pence over the next few days. Finally, we've got Rurelec, where the shares looking quite chirpy after the extended declines. Quite a few false dawns on the way down, so worth maintaining an end of day close stop loss here, probably the 50-day moving average 3.79 pence, or perhaps as low as 3.5 pence, which was the old October support. At least while above that October floor, we are looking for a return to the main resistance, post-August resistance at 6 pence plus. That's it from me. More updates at masterinvestor.co.uk.